Risk benefits can be bought to protect dependents from any loss. It is important not to over-insure yourself, because this comes at a cost. The higher the risk benefits, the more you have to pay. Where these monies could be saved or invested, risk benefits purpose is to provide financial aid so that the member can recover from loss of income due to a disability, and dependents can recover from the loss of a member. Lump sum benefits should not be seen as a provision for the rest of the claiming person's life, but only as a means to recover because of a life event. With this in mind, Acravest strives to explain this strategy to members, so that most of their pension or provident fund monies go into the investment strategy, and not get burdened by the risk-benefit costs. You need to find a balance between risk benefits and investments. If individuals require more risk benefits than what the company has provided them, they can get the required top-up in their own capacity. This is usually more expensive. There are several risk benefits that are usually sold with the pension or provident fund. Here are the main benefits used. Permanent health insurance, also known as income replacement benefit. This pays out a certain percentage, usually 75%, of your monthly salary on a monthly basis, until you recover from the disability, or until the day you turn 65, when your pension or provident fund will start paying out. Group life cover, also known as a death benefit, pays out a lump sum to your dependents, should you pass away. This benefit is usually a multiple of your salary. For example, 3 times your annual salary. Capital disability cover, also known as Cap D, pays out a lump sum should you become disabled. This benefit is also usually a multiple of your salary. Dread disease, also known as critical illness, pays out a lump sum or a portion of your benefit, should you be diagnosed with a critical illness. This benefit is also usually a multiple of your salary. Funeral cover will pay out an amount that was insured for your funeral costs. You get member-only funeral cover, where only the member is covered for the funeral benefit. And then the more popular option is family funeral cover. The member and their immediate family is covered. This includes their spouse and children. This is calculated on a sliding scale depending on the age of the children. Other risk benefits are education benefit, spouse's life cover, temporary disability, etc. The risk benefit costs are calculated by the risk providers or underwriters independently. There are several factors which influence the cost of these risk benefits, including job description, age, gender, and geographical area. The premium is usually a percentage of your salary for each risk benefit, except for funeral benefit, which is a fixed amount per member per month. Risk benefits can then be structured, unapproved or approved. Approved risk benefits are in the name of the fund, and premiums paid qualify for a tax deduction. The benefit is then taxed after death. The first 500,000 Rand is tax-free, and thereafter the money will be taxed according to the tax tables. The trustees ultimately decide on who the benefit will be paid to, using the beneficiary nomination as a guideline. Unapproved risk benefits are in the name of the employer. The premiums are not part of the fund and thus not tax deductible, but the benefit that pays out is tax-free. The premium is calculated after tax has been paid. The benefit will pay out according to the beneficiary nomination form, but if there is no beneficiary nominated, the employer can nominate who needs to receive the money, or it will form part of the deceased's estate or will be paid out to the government-appointed guardian.